Level 1. The new agent. Level 1. The new agent. You're 24. You passed the real estate exam 3 months ago. You stand in a coffee shop in Phoenix, meeting your first serious buyer, a Chinese investor looking to park $2 million in residential property. He doesn't speak much English. His translator does all the talking. You think this is normal? The translator asks if you know anyone who can help structure the payment to avoid certain reporting requirements. You don't understand the question yet. You say you'll ask your broker. The translator smiles. He says most agents already have someone. You feel behind. You feel like you're missing something everyone else knows. This is the moment. The fork. One path leads to clean commissions and middle-class survival. The other leads to private dinners, offshore accounts, and federal indictments. You don't realize you're choosing right now. Level 2. The referral network. Level 2. The referral network. 6 months in, you've closed 4 deals, all clean, all exhausting. Your broker pulls you aside after a team meeting. He mentions a developer contact, luxury condos in Scottsdale, who takes care of agents who send the right buyers. You ask what that means. He says don't worry about it. Just send qualified foreign buyers his way. You'll get a referral fee, off the books. Cash. You Google the developer. Legitimate projects. Real buildings. Nothing suspicious. The referral fee is $15,000 per closed unit. That's more than your last 2 commissions combined. You tell yourself it's just networking. Agents refer clients all the time. The first check doesn't come as a check. It comes in a white envelope. $100 bills. $15,000 exactly. No receipt. No 1099. The developer's assistant hands it to you in a Starbucks parking lot like you're buying a used laptop. You deposit it in chunks over 3 weeks. You tell yourself this is the last time. It's not. Level 3. The shell game. Level 3. The shell game. You're 1 year in. You've referred 11 buyers to the developer. Every payment cash. You've started keeping it in a safe at home because the bank questions started. A teller once asked where the cash comes from. You said you sell cars on the side. She didn't believe you. You switched banks. The developer introduces you to an attorney. The attorney explains how to set up an LLC in Nevada. Anonymous. No public ownership records. The LLC can receive referral fees legally. The fees get reported. Clean. The attorney charges $5,000 to set it up. You pay in cash from the safe. Now your referral fees wire into the LLC account. You're still not paying taxes on them because you're not drawing a salary from the LLC yet. The attorney said to wait until year end. You're starting to realize the attorney works for a lot of people doing the same thing. He never explains exactly what that thing is. You're starting to see the structure. Buyers who need to move money out of China. Developers who need foreign capital. Attorneys who make both invisible. And agents like you in the middle, taking a cut for connecting the dots. You thought real estate was about houses. It's not. It's about making money move without leaving marks. Level 4. The appraisal inflation. Level 4. The appraisal inflation. You've closed 27 deals now. Your LLC has $400,000 in it. You bought a Tesla. You're not the new agent anymore. You're the foreign buyer specialist. Other agents ask you how you do it. You say, networking. They don't push. A new client wants to buy a single-family home in Tempe. Purchase price, $900,000. He's paying cash. He asks if the appraisal can come in at $1.2 million. You ask why. He says he needs to show capital outflow for visa purposes. Higher purchase price means more money legitimately moved offshore. You say appraisals are independent. He says everything is negotiable. He offers you $50,000 on top of your commission if you can make it happen. You say you'll see what you can do. You know an appraiser. You've worked with him on 12 transactions. You take him to lunch. You explain the situation carefully. You don't say, inflate the appraisal. You say, the buyer is highly motivated and willing to pay above market for speed and certainty. You mention that future business from your foreign buyer network could be substantial. You slide an envelope across the table. $10,000 in it. He doesn't open it. He just nods. The appraisal comes in at $1.19 million. Close enough. Your client wires the full amount from a Hong Kong account. You get your commission plus the $50,000 bonus. The appraiser gets steady referrals from you for the next 2 years. Everyone wins, except the market data is now corrupted. Every comp in that neighborhood is artificially elevated. First-time buyers can't compete. Prices detach from reality. But you're not thinking about that. You're thinking about the deposit you just made. Level 5. The title company. Kickback. Level 5. The title company. Kickback, you're 3 years in. Your LLC is pulling in $700,000 a year. You have 3 assistants. You drive a Porsche. You're invited to private investor dinners, where developers pitch projects to foreign money. You don't list houses anymore. You broker capital flows disguised as real estate transactions. A title company owner approaches you at one of these dinners. He runs a small operation in Chandler. He says he can structure closings to accommodate flexible reporting requirements. You ask what that means. He says if your buyers need purchase prices to look a certain way on paper versus what actually transfers, he can handle it. The mechanics. Buyer wires $1.5 million. Title company records the sale at $900,000. The $600,000 difference wires back to an entity the buyer controls, labeled as a refund for repairs or seller credit. The deed shows $900,000. The tax basis is $900,000. But 1.5 actually moved. The title company owner wants 5% of every transaction you bring him. You're already getting paid by the buyer. Now you're getting paid by the title company for routing deals through them. Double dipping. You shake hands. You send him 4 transactions in the first month. One of those transactions involves a buyer who's on a sanctions list you don't know exists. The title company doesn't run the full compliance checks. The wire comes from a Latvian bank with ties to a Ukrainian oligarch network. The money is clean by the time it hits Arizona, but its origin isn't. You don't find this out until 2 years later. By then, it's too late. Level 6. The EB-5 scheme. Level 6. The EB-5. Scheme you're 4 years in. You've moved over $80 million in foreign capital into Arizona real estate. Your LLC has expanded. You have a full team. You're invited to wealth management conferences. You speak on panels about facilitating cross-border investment. It sounds legitimate when you say it that way. A developer pitches you on an EB-5 project. Immigrant investor, visas. Foreign nationals invest $500,000 in a U.S. project that creates jobs. In return, they get a path to a green card. Legal. Regulated. Except this developer's version isn't. The project is a hotel development in Tucson. He needs 20 investors at $500,000 each, $10 million total. But the hotel is never getting built. The land is worth $2 million. The development permits don't exist. The job creation projections are fiction. The EB-5 applications will get filed. The investors will wait 3 years for adjudication. By then, the money is gone. Your cut, $250,000. $50,000 per investor you bring in. You tell yourself you're not responsible for due diligence. You're just the agent. But you've seen the site. You know it's undevelopable. You know the numbers don't work. You refer 5 investors anyway. 4 of them are Chinese nationals who've been trying to get their children into U.S. universities. They're desperate. They wire the money within 2 weeks. The fifth is a Russian surgeon who wants out of Moscow. He wires from a Cyprus account. The hotel never breaks ground. The investors lose everything. 2 of them hire attorneys. The attorneys start asking questions. They send subpoenas to your LLC. You forward them to your attorney. He says, don't worry. Plausible deniability. You were just the referral agent. You didn't structure the deal. You stopped sleeping well. Level 7. The federal letter. Level 7. The federal letter. You're 5 years in. Your LLC grossed $1.3 million last year. You own 3 rental properties. You're engaged. You're thinking about buying a house in Sedona. You feel successful, untouchable. A letter arrives. IRS. Not a refund check. A notice of examination. They want 3 years of records. Your LLC, your personal returns. All source documentation for deposits into your Nevada account. You call your attorney. He says, stay calm. This is routine. Provide what they ask for. Nothing more. You provide what they ask for. 6 weeks later, a second letter arrives. FinCEN, Financial Crimes Enforcement Network. They want the same records plus all wire transfer documentation for foreign source transactions. Your attorney's tone changes. He says, get a criminal defense lawyer. Now, you hire a defense attorney, former federal prosecutor. She reviews your files for 8 hours. Then she looks at you and says you've been operating a money transmission business without a license. You've facilitated structured transactions to evade reporting requirements. You've potentially laundered funds with sanctioned entity ties. And you've done it across state lines, which makes it federal. You say you're just a real estate agent. She says that's not a defense. You ask what happens now. She says it depends on whether they think you're a target or a witness. If you're a target, you're looking at multiple felonies. If you're a witness, you cooperate, and maybe you avoid prison. You think about the developer, the title company owner, the attorney who set up your LLC, the appraiser, the EB5 promoter. You're all connected. If one goes down, everyone does. You wonder who's talking already. Level 8. The Cooperation Agreement. Level 8. The Cooperation Agreement. You're in a conference room in downtown Phoenix. Your attorney, 2 FBI agents, an assistant U.S. attorney. They lay out the case. 19 targets, developers, title company operators, attorneys, appraisers, foreign nationals, and you. They have wire records, emails, text messages, recorded phone calls from a cooperating witness you thought was a client. They have your LLC bank statements showing $2 million in unexplained cash deposits over 3 years. They have testimony from the EB5 investors. They have everything. The AUSA offers you a deal. Full cooperation. Testimony against the others. Wear a wire for 6 months. In exchange, they drop the money laundering and EB5 fraud charges. You plead to 1 count of structuring. Sentencing guideline, 18 to 24 months. Possible probation if your cooperation is substantial. You ask what happens if you don't cooperate. She says you go to trial on 11 counts. If convicted, you're looking at 10 to 15 years. Asset forfeiture. Your LLC. Your properties. The Tesla. The Porsche. Everything. You sign the agreement. You wear a wire to 4 meetings. You record calls with the title company owner, the developer, 2 other agents. You testify in front of a grand jury. You give them names, accounts, transaction records. You burn every bridge you built in 5 years. 14 people get indicted. 3 plead out. 11 go to trial. 9 are convicted. You're sentenced to 2 years probation, 500 hours community service, and a $50,000 fine. You lose your real estate license. Your LLC is dissolved. Your fiancé leaves. You move back in with your parents in Mesa. You're 30 years old. You're a felon. You're broke. And you're one of the lucky ones. Level 9. The cycle. Level 9. The cycle. The federal task force holds a press conference. They announce the takedown of a 19-person real estate fraud and money laundering ring. They say they've disrupted over 100 million in illicit cross-border transactions. They praise interagency cooperation. The local news runs it for 2 days. Then it's gone. 6 months later, the market is fine. Prices still climbing. Foreign investment still flowing. Different agents now. Different title companies. Different attorneys. Same structure. The demand hasn't changed. Chinese nationals still need to move money offshore. Russian oligarchs still need to park cash in hard assets. Developers still need capital that doesn't ask questions. A new brokerage opens in Scottsdale. Luxury focus. International clientele. They're hiring. The job posting says Mandarin speakers preferred. The commission structure is aggressive. The training emphasizes relationship building with high net worth foreign investors. They don't say how those relationships work. They don't have to. You see the posting on LinkedIn. You almost laugh. You know exactly what they're hiring for. You know the agent they hire will have the same trajectory you did. Starts clean. Finds the referral network. Gets offered cash. Sets up the LLC. Learns the appraisal game. Meets the title company. Takes the kickbacks. Then one day, a letter arrives. Somewhere in Tempe, a 23-year-old just passed her real estate exam. She's got student loans and a Toyota Corolla. She's hungry. She's ambitious. She's meeting her first foreign buyer next week. He's going to ask if she knows anyone who can help structure the payment. She's going to say, she'll ask her broker. And the broker is going to smile.